Welcome to the Real Estate Asset Management Podcast, brought to you by Break of Day Capital. The show focuses on educating syndicators and apartment owners on how to build systems and manage their properties more efficiently to become a best-in-class operator. 100% straight talk. Let's jump in. Hey everyone, welcome to another episode of the Real Estate Asset Management Podcast. I'm your host, garylipsky. Be sure to join our Facebook group, Asset Management Mastery, where we have a great community of thousands of like-minded individuals sharing resources and best practices.
Choosing the right insurance coverage for multifamily properties isn't that complicated if you know who to talk to. At the Garzella Group, we're uniquely qualified to help you navigate the range of policy choices you have, and we're committed to saving you 30% in the process. We do intensive market research and have nationwide relationships, so we can find coverage other insurance brokers simply can't. We should talk. Go to quotenow.biz and we'll start the conversation.
Today on the podcast, we have Ben Lapidus. Ben is the CFO for Spartan Investment Group, where he has applied his finance and business development skills to construct from scratch a portfolio of over $500 million assets under management, build the corporate finance backbone for the organization, and organize over $200 million of debt capital for the firm. In addition to completing over 50 real estate transactions at and prior to Spartan, Ben is also the founder and host of the National Best Ever Real Estate Investing Conference. And if you haven't gone, definitely check it out. It's a great conference. And is also the managing partner of Indigo Ownerships LLC. Welcome, Ben. I always ask my guests to tell a little bit more about yourself and what you do.
Yeah, I am one of those people that likes to be really into the numbers, but also likes to engage with other folks. So I'm in Denver, got 3 kids, all under the age of 4, 2 partners with Spartan, and just having a blast growing that thing. We're headed towards $1 billion assets under management.
That's awesome. That is awesome. And you are in the thick of it with those young kids. Luckily, I've got a 16 and 20-year-old, and it's like I'm an empty nester at this point. So
right, yeah. On the way out, I'm phasing in. It's crazy.
Yeah. So I know you've had this kind of entrepreneurial journey, and I want to dive a little bit into that because I know you sold a business, and how did you get into real estate, eventually?
Yeah. So Eric Ries wrote this book called The Lean Startup Machine. When I was in school, 2009 happened, and becoming an entrepreneur was very much in vogue. So learning entrepreneurship in the New York City metro was the thing to do. And one of the principles he had there, which Jim Collins calls the Hedgehog principle, is find something that overlaps with 3 components of your life. Something that you're the best at, something that you could be a category of 1 at, something that you really enjoy doing, that you're passionate about, which isn't always the same as being the best at. And 3, something that's economically viable, something that you can make money with. And so my childhood, I was raised to focus on economic viability, and really nothing else matters other than the survival and thriving of financial freedom. And in building a study abroad company in college and getting that to $2 million in revenue and jumping off waterfalls and ziplining in Costa Rica, I did learn to chase fun. I learned to find business models that I enjoyed, that I was passionate about, but I wasn't the best at it. Didn't know much about travel, wasn't super passionate about renewable energy, even though it's something that I buy into as a betterment for the world. So when I found real estate investing, it used my quantitative skill sets and my relationships for negotiation abilities. It was something that I enjoyed immensely because it was physical assets that I could learn something about and get my hands dirty with. And it was something that was very economically viable. 90% of all millionaires have real estate in their portfolio, right? So it was this beautiful intersection of all 3. It was my 5th entrepreneurial journey getting started, and it was the one that finally landed.
Yeah, I think that passion piece is so important. I remember vividly in college, I had an entrepreneurial teacher, and she talked about that. And, as a, young kid, I'm like, I'm just chasing money. And so we started a restaurant delivery service while we were in college, kind of like a DoorDash and, the other food delivery. But I love food, but I just wasn't passionate about just basically delivering widgets, And so we did well, but we just didn't, didn't have the mental strength to do it for years after years after years. So we just did a short period and sold it, and it was like, how to do something else that we were passionate about. So that is so important.
Yeah, which is why we sold the study abroad company. Just wasn't passionate about it long term.
Yep. So in your bio, you talked about the role of a CFO and how it's really the backbone of that of your company, and try talk about that. Talk about how you interface with the different roles and your responsibilities.
Yeah, the old adage of every business needs a visionary, a bean counter, and an SOB, right? I'm the bean counter of the trio over at Spartan. I think what's unique about my role and my placement, specifically me in that role, is that I really have no business calling myself a CFO from kind of accounting, growing up standards. Never spent time as an accountant. I've done bookkeeping, I've done controls, I've done receivables and payables, but I've never really done that as a career. I've just done that for myself in entrepreneurial endeavors. But what's unique about what I think I bring to the table is the investment finance background, having spent some time on Wall Street, very little time on Wall Street, very little time in the venture capital space, but applying that investment finance lens and education to everything that I've always done, evaluating the world, recognizing patterns, and using that pattern recognition to come up with and deploy an investment thesis inside of Spartan, and to continually optimize that. So not only am I responsible for the corporate finance, which is the backbone, the accounting, the financial planning and analysis, controls, receivables, payables, payroll, bookkeeping, month-end reconciliation, but I'm also responsible for identifying our investments and making sure that the performance of those investments reaches or exceeds our targeted returns. And that's the part that I really enjoy. I just get the bonus of accounting and kind of backbone finance, and get to learn a lot from the people that I've hired and get to work with.
I think a lot of syndication companies out there do not have that financial background that you talk about. And I'm curious what kind of like software and tools that you use to help you.
Yeah. So what's really interesting is that the real estate industry specifically uses one of three companies. They use Yardi, or they use RealPage, or they use MRI, I believe are the three. Like those are like real estate accounting softwares. And when we decided to kind of grow up from our startup QuickBooks Online usage to something that had multi-entity reporting for syndications, for portfolio roll-ups rather, we looked at those three. Storage isn't as cost effective to use by unit kind of pricing. So one or two of those were not economically viable, but we could have made one of them work that had real estate accounting specific software, but they just didn't integrate with the things that we needed them to integrate with. So we actually built for the future, and we've used NetSuite, which is the most popular accounting software globally. It's owned by Oracle. Even though it's not built specifically for real estate accounting, we've built it for ourselves to use that. And we're in the process of integrating it with Salesforce, integrating it with our property management software, integrating it with a custom build investor management system, integrating it with JP Morgan Access, which is the next level chase.com. So we have real-time banking data ported in. So by using a best-in-class accounting software for the world, as opposed to just real estate accounting, we're able to tack on new technology outside of real estate that we can apply for efficiencies and data integrity that allows us to go faster and be more transparent with our investors and our stakeholders.
Well, that's huge. That's a huge difference maker compared to other companies out there. So do you have a full-time tech person in-house, or you have a consultant that's kind of working with you to kind of make it all work to get nicely?
Yeah. I spent 5 years in advertising technology in New York, specifically kind of bridging between sales and the machine learning team. So I was a data guy, basically. So I have a data background. I would not consider myself anywhere near a CTO, anywhere near a CIO, chief information officer, but I understand data architecture. I understand data pipelines. So I can scope vendors pretty well without having anybody else on the team. I do have one person on our team who's does mostly business intelligence work for our acquisitions team, but he also assists in getting some of those data pipelines working. But he doesn't understand the context of some of our systems. So we do use outside consultants to help bridge the gaps that we have inside.
Nice. And how does your role affect your asset management through all of your different assets that you own? Because obviously, I'm sure it plays a huge role.
Yeah, I think having as much depth in the financial statements and as much depth in the acquisitions process lets me see both the beginning stages and the results stages of every particular deal. And so once again, asset management is not something I've spent a decade doing prior to building Spartan. So I'm lucky to have hired people who have that experience and can dive into it. But sometimes those folks are kind of just focused strictly on asset management in the minutia of what they know. And so having acquisitions and capital markets and accounting and finance experience allows me to kind of elevate the thinking of the team so that we can be more comprehensive and be more creative in our execution and respond to the external environment so that we get the best outcome as things change.
That's awesome. That's awesome. Very, very impressive how you guys have built this organization. And I've met Ryan. I've met I'm drawing a blank, your other the other partner, and just the energy that you guys have and your philosophies is just is very impressive. So kudos to you guys. And so you mentioned going towards $1 billion. When what is the future hold for Spartan? When are you looking to hit that mark?
Originally, we were looking to hit that by summer of 23. That was set about a year ago. But with the environment where it is, we're going to see how much cap rates adjust in response to interest rates. If they don't adjust, then we're going to be on hold with acquisitions. Even though we're in the process of raising a $150 million fund, those monies will either be returned or will sit there, or we'll just be recapitalizing some of our other assets with it that still have juice in them that we can kind of keep the IRR up. But we have the deal flow. It's just a matter of whether or not we want to purchase it. We've got really, really great relationships at this point. Being 5 years in, we're probably a top 10 buyer for 2 or 3 of the major brokerages out there. And storage is a very incestuous small industry. There's only 20 brokers or so that are out there. Meaningful brokerage groups that are out there. So timing, I couldn't tell you. We don't like to commit ourselves to anything. We've actually built our organization to be financially stable without having to buy. Not quite able to pay for all of our overhead with our monthly recurring revenue, but close enough that we could survive for high months, low years to come without any acquisitions.
Yeah, I feel that that's so important. People talk to ask me about running my own property management company and this and that, and I'd much rather be agile and smaller, where if we don't do a deal for a while, like during COVID, we didn't do a deal for like 15, 16 months. We were still chasing deals, but it just didn't work out, and there was no gun to my head to do a deal just to do a deal to pay my bills, which is so important for investors out there to invest with operators that aren't doing a deal just to do a deal. Yeah.
That I completely agree. That being said, I still think there is opportunity out there, specifically in the storage space, despite where interest rates are going. But you really have to have deep experience, I think, to be successful in this particular moment.
Yeah, I think this is where asset management is so key during these times, where so many operators out there were able to kind of just ride the wave and do really well and look really smart. But now when you're may have to take a punch, you may have some debt coverage ratio issues, loans that are due. This is where you're going to see some really good opportunity potentially.
Yeah, agreed.
Well, I appreciate you coming on the show and sharing a little bit about your journey and about Spartan and your role as a CFO, which is really critical to building a very strong, backbone, as you said, infrastructure for growth and getting to over $1 billion. And heck, I imagine you guys will be over $2 billion in 10 years. So like I said, very impressed with what you guys are doing. And where can listeners find out more about what, about Spartan?
Yeah, you can check out Spartan at spartan-investors.com, and you can interact with other like-minded, entrepreneurial, highly successful commercial real estate investors at the Best Ever Conference, besteverconference.com.
All right, excellent. Well, I will be there this year and looking forward to it. Awesome. This is Garylipsky signing off. I'll be back next week with another informative episode on the Real Estate Asset Management Podcast.
To all of our listeners, thanks for joining us. And if you like this episode, please head over to iTunes or Stitcher and like, subscribe, and review this podcast. as it will help us grow our audience and reach more people. And if you'd like to learn more about what we do at Break of Day Capital, head over to our website, breakofdaycapital.com, and sign up for our newsletter and or fill out our investor application. We'll talk to you next week.